What if the Bitcoin Treasury companies collaborate? Today, we want to discuss an opportunity we see in the markets. And Sander, take us through that opportunity we see and have discussed a lot internally.
The idea is quite simple. Every Bitcoin Treasury companies are now challenged from their investors and the market in general with one big question. And that question is, how do you reach scale? And I think one of the interesting narratives with smaller Bitcoin Treasury companies, when you have a smaller stack compared to the bigger ones, you have the opportunity to create way more Bitcoin yield. But this year we have way more credit products, which requires a lot of collateral, and therefore investors are looking to companies that are able to issue credit at one point. And through all these discussions with other investors and treasury companies, we thought that consolidation needs to happen, but the question is how. So our idea was quite simple. We need scale on the balance sheet level, but the complexity of merging equity is quite high. So what if we turn the model upside down? Instead of merging equity and a combined balance sheet owned by one group of equity holders, we looked into how balance sheets could be merged without touching the equity. Basically creating a Bitcoin Treasury alliance where we have a combined Bitcoin balance sheet that you can use to issue credit instruments.
Okay, so just to make everyone understand, you think that, let's say you have Bitcoin Treasury company A, B, and C, which all have 1,000 Bitcoin on their balance sheet. Individually, you could argue that they are too small to issue any credit instruments that actually will have a huge impact, because the collateral base is quite low.
Yeah.
But combined, they will have a collateral based on 3,000 Bitcoin, which gives way more opportunities when it comes to issue different kind of credit instruments.
Yeah, I think every credit issuer will face some challenges with credit rating, with liquidity, with fundraising. And we all have one big brother in the market called Strategy that has a huge, I would say, like first mover advantage in terms of issuing these instruments, in terms of liquidity, but also the collateral base. So the question is like, how do you get access to the same tools? And we believe that since credit instruments is non-dilutive, it doesn't touch your equity directly at least. And therefore it could be room for combining these balance sheets and then start issuing and collaborating on credit rating, liquidity in the instrument. And it might be so that even if you're listed in Sweden, maybe that specific instrument should be listed in another market because of liquidity and popularity.
If we look to today's credit market when it comes to companies using Bitcoin as collateral to issue credit products, we have three big players today, Strategy, Strive, and Metaplanet, which all three has been successful in issuing these products, and especially Strategy is the clear leader. And when we look to these companies, Strategy has over 700,000 Bitcoin, Strive over 12,000, and Metaplanet over 35,000. And what this tells us is that you need to have a significant collateral base to attract the institutional capital to come into these companies.
Yes, and I would say like even if you have two other players other than Strategy, it's a huge gap to fill. And we know that BlackRock and Vanguard are the biggest buyer of Strategy's credit instruments. So the question is, how do you get in the same room to access that capital? That's where I see like this collaborative way of doing this is quite attractive.
Yeah, totally agree. And if we look to the Bitcoin rankings on the Bitcoin holdings globally, and we take out the three companies we just spoke about, there are remaining almost 373,000 Bitcoin in other public companies, which we believe many of them are facing the same issue of they need more size to compete with Strategy and the other players.
Yeah, and this is where the collaborative way makes a lot of sense for me, and because the narrative behind, again, smaller Bitcoin Treasury companies is If you raise another 1,000 Bitcoin in a company that holds 1,000 Bitcoin, you double the stack. It's very, very accretive for all the shareholders. For Strategy with 700 something thousand Bitcoin, doubling that takes a lot of time. So the Bitcoin yield has to be a little bit lower just due to size. But if you do this on the balance sheet level, you can still accomplish the same with amplified Bitcoin, issue the credit instruments, getting the right credit rating, having enough liquidity in the instrument to pay for the interest rate is very, very attractive. And you also see that the combined size of the other companies, and I believe this will grow over time, is at a pretty decent size. And for me, that makes it quite attractive if the industry is open for it to look into an alliance model where you collaborate more than you compete.
Yeah, and I mean, the whole goal or the target of such a model is at the end of the day to create a Bitcoin yield in the equity on top, because of course you want to produce some yield in the structure, the collaborative structure,
Yep.
which at the end of the day will, let's say, create some Bitcoin return to the equity on top. So
yeah, and you remove a lot of the complexity here. That's very because doing public to public M&A takes a lot of time. You can think about other treasury companies allocating to other Bitcoin treasury companies. It's not as easy as having one separate entity where you put collateral into it and then start issuing together. Then you will have many local sales team, local marketing teams, but one combined global balance sheet that are able to compete on the same terms and attract the same investor as the big ones.
yeah, and we have used some time to talk about oil and gas industry, for example, and I think you can actually see some of the same structures in these industries, because you have a lot of joint ventures where different companies put in, for example, some put in oil rigs, some put in competence, some come with capital, and they are all together building a joint ventures, but they're not giving away any of their assets because they are still indirectly holding, in this example, the Bitcoin, but just in another structure.
Yeah. Yeah, and therefore these structures require good legal framework, good governance, and because the whole point is that you don't give away your Bitcoin. That's a very important thing in this alliance structure. You deposit or pledge your Bitcoin to issue instruments, and all the upside goes back to the common equity shareholders.
Yep.
Similar to what Sailor is doing, you just do it in a collaborative way.
Yeah, and I think just to put some numbers on why it makes sense for a lot of companies to collaborate is when we look to different geographic areas. If we look to North America, we have over 317,000 Bitcoin with listed companies that doesn't have credit instruments today. And in Asia, 29,000, Europe, 17,000, and so on. So I think you have a lot of companies in different parts of the world, which alone isn't big enough, but together could be a really significant challenger globally to Strategy and the biggest players.
Yeah, and that's the beauty of Bitcoin as collateral. It's global, so you doesn't need to do it as a local play. You can actually create this alliance globally and list where it makes the most sense and actually get the benefit of it back in your local market. We know that, for example, Metaplant alone is 2 times bigger than the whole European market.
Yeah.
We need to make this attractive for new investors to come in with more Bitcoin into the balance sheet of these companies through the flywheel that works very well in good markets. So I think this could be one of the things you will see in the market that could boost the confidence from the investors to actually put in more Bitcoin into smaller treasury companies and generate the yield that was so attractive 6 months ago.
Yeah, so I think this opportunity is very exciting. I think it's important also to say that this is more on an ideal level. It isn't a specific strategy we have that is in play for us right now, but I think it's really a really good opportunity to look into. We want to have an open discussion and put it out there for a discussion with other players. And yeah,
it's still on an idea basis. We haven't seen any activities like this in the market. We have always had a very collaborative way of thinking of it. We are from the Nordics. We have a little bit different view on how you can build global companies. And I think that's a consequence of growing up in a smaller market where it's basically you need collaboration to win. So yeah, it's at an idea level, but we're still very open for having these discussions at the moment. And I think it will be good for Bitcoin. I think it will be good for the Bitcoin Treasury industry. And I think it will be very good for the investors to see initiatives coming into the market that are scalable without having to merge and do all the complexity on the equity level.
Yeah, so I think we will end the episode saying that at the end of the day, we are all investors into Bitcoin, and we think a collaborative model could be the way to go. So thank you for listening, and see you next week.